Hello, I'm Donald Leggett, and welcome to this week's London South East CEO interview. I'm joined today by Tom Reynolds, the CEO at AIM-listed Solo Oil. Solo are continuing to divest assets, refocus on opportunities within the European energy market, and they're changing the name to Sirocco Energy. Welcome, Tom. It is very good to have you in London South East today.
Hello there, Donald. Very happy to be here.
And whereabouts are you today then, Tom?
I'm sitting in a very sunny Aberdeen, actually.
Well, there you go, oil capital of Europe.
Indeed, yeah, energy capital as we go into these transition energy times, but you're absolutely right, yeah.
Energy capital of Europe, fair point. So let's turn to Solo Oil. What did you inherit when you joined Solo, and why that change of direction?
So I've been engaged with Solo since 2018, and during that period of time there was a change out of the board, and when the new board joined, it had inherited an interesting and diversified box of assets, which all of them as a whole were likely to continue to need ongoing funding, given the stage of maturity and the nature of the assets. A lot of them were very early stage in terms of exploration or with development costs ahead of them. And the board was very keen, and I was certainly very keen to rebalance that portfolio and introduce elements of cash flow so that you had some cash flow coming from the company to fund its earlier stage assets and fund growth internally through that vehicle. We do believe there is an opportunity at the same time within the European energy market to provide that source of cash flow. And as you know, we attempted to acquire some interesting gas assets in the Netherlands in late 2019 and early 2020. And that was part of trying to take that strategy forward so we could deliver cash generation into the earlier stage portfolio at the same time as rationalizing some of those historical assets.
So all that makes a lot of sense, but has selling assets and pursuing the buy and build strategy proved harder than you thought?
It's been a very volatile market in many respects, as I'm sure both you and many of your viewers will understand.
Life did not deal you a kind hand, that's for sure. Timing wasn't of the best.
Yeah, I mean, I think one of the things we experienced with the acquisition that we attempted to enact in the Netherlands was a very significant drop in wholesale gas prices, which obviously underpinned the value of the assets. And that reduction in gas price started in autumn and actually ran all the way through the winter into early 2020. And that actually created a significant barrier to us both renegotiating any deal with the counterparty in parallel with raising the capital to fund the deal. And ultimately, we basically had to walk away from that opportunity because there wasn't something that we could deliver, we felt, that was valuable to Solo shareholders. And that's an example of an environmental variable with a small e, in this case, wholesale gas prices in Europe. Which
are wholesale gas prices in Europe still struggling? Are they still low?
They have recovered somewhat, but they haven't recovered to the level that they were, late last summer. They're still depressed, as are commodity prices across the board, oil and gas price. Because then the secondary hit that then happened was the various enactments that happened, which really shut down a huge amount of demand for energy on a broad scale, but that impacted global oil demand and local gas demand. Actually, for another area, I did some analysis of wholesale gas usage in the UK between February, March, April, and into May. And it's really quite astonishing the level of demand that in commercial areas, industrial, that dropped off and basically took a significant amount of demand out of the market. And obviously, supply is relatively flat, and that then had a knock-on impact on price. And that's definitely what we saw. So to your original point, Donald, I mean, I think it's there's been a huge amount of volatility in the market. And during that sort of price volatility, what you also find is that potential sellers or counterparties in transactions get nervous about doing deals because they recognize they'd be doing deal at what is an abnormal low point in the market. And so the supply of potential opportunities tends to dry up, unless you're dealing with people who have found themselves in a position of distress as a result of that.
Those are the negatives. We've heard about the tough times, but seeing Aminex get the go-ahead in Tanzania for its Ara farm-in must have been a truly positive moment for you.
I think that's been a fantastic result, and you know, I'm delighted for our colleagues at Aminex and look forward to working with them on the project going forward. The approval now means that the project is funded and the joint venture going forward is very clear. You'll have ARA as operator with 50%. You'll have Aminex with 25% with a carry from ARA, and then the solo 25%. So I think it really clarifies the future of the asset and how it will move forward. And that in itself really reinforces that it makes sense for Solo to test them on. And you know, I think what's also interesting, if you look at the value read across of the deal that Aminex did with ARA, which is now has Tanzanian authority approval to go ahead, it really demonstrates the tangible value within Solo reflected by the Revuma asset.
So you expect Revuma to be worth a good chunk more than it was?
I think, you know, some of this is driven by sentiment, and what we have seen is a softening of share prices over an extended period of time in both Aminex and Solo, and I can only really attribute that to a gradually reducing confidence that the deal will go ahead and that the asset will move forward. And I think what we've seen very recently is a significant recovery in the share prices in both of those companies with the announcement that Aminex made last week about the approval. And you know, so I think the sentiment clearly has been positive. The market seems to have recognised that is positive for the asset and therefore positive for the value held by the asset owners.
Sure. The share price shot up. You made it onto the London South East Leaders Board at one point, which is always a good thing. I always take notice of the winners and the losers on a daily basis. So what comes next in the sales process? Could I ask? What's next?
Yeah, so I mean, we've obviously identified a group of potentially interested companies that would be a good fit for the asset. And earlier in the year, they carried out some initial technical due diligence as well as commercial due diligence on the asset itself. There has been a hiatus whilst we've been waiting to see what happened with the government approvals for the Aminex ARA deal. And we're basically just at the point of re-engaging with that community of prospective buyers over the coming weeks.
And have you shared your data room with them? Has it got to that stage yet?
A number of the counterparties have already engaged with, you know, technical and commercial data room and done some initial work, certainly, yeah.
Great. Staying with Tanzania, let's talk Helium-1. You put out a sort of a holding out an S on Helium-1 this morning. Could you decipher that for us and tell us exactly what Helium-1 is and what its potential is?
Sure. So Helium-1 is a very interesting company. Its assets are also in Tanzania. It holds licenses in the Rukwa Valley area of Tanzania, which is part of the valley that makes up the Great Rift Valley that runs down the eastern side of Africa. And it's the Rift Valley is a geological feature which creates lots of interesting features for mineral and resource extraction, not just oil and gas. And helium is one of them. What the team at Helium-1 had noticed, they'd put together the jigsaw puzzle of high concentration helium seeps at surface, along with seismic data in the area to identify where high concentration helium gas may be trapped in the subsurface. Putting those two together is the first step towards putting together an exploration plan around finding natural resources like helium. And Solo was involved early on and has been a shareholder for a number of years, very supportive of the company. And in fact, we invested in a convertible loan note during 2019 to support Helium-1 moving forward. What Helium-1's been doing over the last little while is firming up a technical exploration plan that will involve drilling some of the higher order targets that they've identified to basically prove or disprove the existence of helium in those locations. And in parallel with that, the company has needed to be funded. And also, it's been a goal for Helium One for some time to be listed on a recognized stock exchange. So the announcement that Solo put out earlier on today was really just to recognize the fact that the authorities in Tanzania have approved and extended the licenses. So that gives Helium One access to the land and the approval for moving ahead with an exploration program.
Always a good thing, to be fair, always a good thing.
So that's foundational for the company. And what Helium One has been doing over the last 12 months has been looking at a number of options to both fund the company's exploration plans and become listed. And they are actively involved in conversations right now. I can't say much more about that particular process, given the commercial sensitivity around it.
So obviously people want to know which exchange Helium One might be listed on. Is it too soon to say?
Oh. It is too soon to say. What I don't want to be responsible for is setting hairs running on identifying which potential company and which location. And so I think it's appropriate that we leave it there. But I think what I would say is that I'm very excited to see Helium One moving forward in a positive sense. And I'm confident that they'll be funded to drill a very interesting set of exploration wells in 2021.
Okay. Turning to European energy deals, when can we expect you to get back to your knitting, your new strategy? When can we expect a European energy deal, or even a time frame for a European energy deal to be struck?
So, I mean, I think it's a very interesting market, and one of the reasons that the board turned towards the European energy market is it's large, it's on our doorstep. We've got a high degree of knowledge and experience in the energy market in Europe as a whole. So it's a market we're close to and understand. And even though we've been relatively busy and all the issues that have been going on this year that we're all familiar with, and the disruptions and volatility we've already talked about, we have been remaining close to the market and identifying and basically testing potential opportunities. So that process has never gone away, and we've been continuing to be active in that process.
Have you found something that you fancy?
I mean, at any given time, there's a few things that we're looking at. I think what's interesting is that we've broadened the target criteria to include assets within the wider energy complex. And I think this is important for a couple of reasons. One, it clearly expands the set of opportunities that you can look at. And two, it allows Solo to play its part in putting together a portfolio of cash generative assets within a wider asset set that will remain viable and relevant as Europe goes through the energy transition. So it won't be a surprise then to hear that we've broadened that target criteria to not just gas production, but also we will look at assets that include power generation and infrastructure within the energy complex. And I think that's pretty exciting in that it will provide a lot of other optionality to get engaged with other assets that can generate cash and generate a source of growth for the business.
And what does your funding position look like? So do you need to actually sell Revuma before you can get into this new world of energy renewables and your transition energy as you described it?
Yeah, I would say the two processes run in parallel. So as a public company, and clearly one of the benefits of being public is that you can approach the market to raise capital when you have a good reason to do so. I think the clear momentum on Revuma with the ARA Aminex news does make sense to test the market now. What I would say is that we're not a price taker. If the sale of the asset offers a risk-adjusted value to Solo that we think is sensible and would give us the opportunity to reinvest in other assets, then we will proceed on that basis. And yes, you can take from those words that it's not a foregone conclusion that we would sell at any price. I'm sure our shareholders would support that they, like us, see significant value in Revuma, and we want to make sure that value is reflected in any deal we might do. The second half of that question is, okay, well, how do you fund other asset processes going forward? And kind of refer back to that point about being a public company. There's a number of our peer group companies have raised money recently. The market seems to be open, and if we have a good reason for going back to the market to fund the company, we don't need to wait until we've sold Revuma. We can go back to the market and raise capital as required.
So would it be a placing, or would you be interested in debt, or the combination of the two?
I think generally it would always be a combination for the two, particularly if we were looking to acquire cash generative assets. The priority is always to look for sources of non-dilutive capital. So what that would typically mean is if you can get vendor finance, a number of companies you will be familiar with, where they've done deals with the seller of assets to basically pay back the seller out of the cash flow of the asset. That's a deal structure that we have certainly looked at in the past. And then the use of debt, which doesn't dilute shareholder value directly by issuing more equity, clearly would look to optimize that as a part of any funding solution going forward.
Okay, tight cash control is essential. You sound like you're a Scotsman. You sound like a tight cash control kind of guy. Is that why directors are now being paid in options? I understand you're not actually receiving a salary at the moment.
That's correct. I mean, the board's been really consistent around controlling cash and making every penny a prisoner within Solo, and the deteriorating conditions in the market and in the world, frankly, with the onset of COVID-19, really cemented a decision to be paid in options as a range of a number of methods to preserve cash in the business and to extend the runway the company had. We think it's important to be aligned with shareholders, not just with the existing skin in the game that all of the board have through prior investments, and this effectively builds on that in that we're effectively taking increased equity exposure rather than taking money out of the company.
And my final question to you, Tom: what kind of news flow can we expect in the next 12 months? And perhaps if you could wrap into that, why should people invest in Solo Oil?
So I think there's probably three things I would say in answer to that question, Donald. I think the first, and probably in the crudest of terms, the company is currently valued considerably less than the core net asset value of our interest in Revuma and Helium One. So I think that immediately offers any investor the route to an uplift in value as those two assets become recognized, and hopefully through this conversation we can demonstrate to your listeners how there is a clear path to both Revuma and Helium One turning into more value going forward. So I think that's the first point. I think the second point is that the strategy around the European energy market hasn't gone away, and you have a board that's very intent on identifying opportunities to put shareholders' capital to work in very interesting assets that allow for recycle of cash flow into more assets, and from there you get that very virtuous cycle of growth and value growth with it. And I think the European gas market and the transition dynamic offers a great deal of opportunities to companies like Solo that are close to and understand that market and the dynamic. And then the final thing, the third thing, is that really to underline the fact that the board holds a very high level of personal exposure to the company in terms of shareholding. So we very much are eating our own cooking here, and this represents a significant element of value to each one of us, and we want to see it be successful.
Tom Reynolds, CEO at Solo Oil, thank you very much indeed for joining us today from Aberdeen. For more interviews like this one, please subscribe to the London South East YouTube channel. And finally, thank you for watching, and do stay safe.